In this appendix, we're going to be talking about payroll accounting and some of the specifics about payroll accounting. You should be able to record the payroll for a period, record the employer's payroll taxes, and discuss the objectives of the internal controls for payroll. The term payroll pertains to all salaries and wages paid to employees. Payments made to professional individuals who are independent contractors are called fees and are expenses in the current period. They are not payroll. Payroll regulations relating to such areas as taxes and reporting apply only to employees. When determining payroll, it involves the computing of three different amounts. One is gross earnings, two is our payroll deductions, and three is net pay. Everybody should have some experience with payroll from at least the employee perspective. You may not have calculated payroll for an employer, but as an employee, you have seen these different aspects at play. So to start off with, and jumping out of the gate, let's talk about gross earnings. Gross earnings is the total compensation that is earned by an employee. There are various types of gross earnings. They can be referred to as salaries, wages, bonuses, and other compensation. Total wages is determined by applying the hourly rate of pay to the hours worked. Most companies are required to pay a 1 and a 1/2 times the regular hourly rate of pay for overtime work. Overtime provisions are state laws. And what that amount is, depending upon the situation, is typically defined by the state. There are a variety of laws that govern payroll. Some of them are at the federal level, some of them are at the state level. When both entities have a law regarding something, the jurisdiction that is most favorable to the employee is the one that you use. You've all been subject to payroll deductions in your own personal paychecks. Payroll deductions are mandatory payroll deductions, and they will typically consist of FICA and income taxes. In the state of Colorado, that is your FICA tax, your federal income tax, and your state income tax. There are some other payroll deductions in other states that may come into play, but these are the three most common. These deductions do not result in a tax expense to the employer. These are taxes as paid by the employee. FICA taxes are designed to provide workers with supplemental retirement, employment disability, and medical benefits. The limits that are currently indicated on this screen are not correct. It's $127,000 currently for Social Security. And there is actually a supplementary Medicare that is employee side only that we will find on those high wage earners. FICA taxes are also known as your Social Security taxes. Income taxes are required to be withheld from employees each pay period, and the amount is determined by four variables. One is the employee's gross earnings, the second is the marital status, the third is the number of allowance that is claimed by the employee for himself or herself, his or her spouse, and other dependents, and fourth is the length of the pay period. Some cities and most states do require that employers withhold income taxes from the employee's earnings based on a stated upon rate. And then last but not least, let's talk about the voluntary deductions. So here you see the United Fund. That's a voluntary deduction. These pertain to withholdings for charitable, retirement, and other purposes, and these have to be authorized by the employee to be withheld from their pay. Once we take the gross earnings, so wages times hours, and we remove all of the different withholdings from it, we come to what is called net pay. And this is the amount that is determined to be paid to the employee by subtracting the payroll deductions from the gross earnings. Those amounts that were deducted from the employee's pay are not taxes or expenses of the employer. The employer is only the middleman and will remit these amounts to the appropriate agency on a specified schedule. When it comes to being an employer and having to account for your payroll, there are a number of things that we use. One is the employee's earnings record. This is a cumulative record of each employee's gross earnings, deductions, and net pay during the year. This record is used by the employer in determining when an employee has earned the maximum earnings subject to FICA taxes. Filing their state and federal payroll tax returns gives them the appropriate information they need to determine their amounts. And providing each employee with a statement of gross earnings and tax withholdings for the year. That's your W-2. Many companies use a payroll register to accumulate gross earnings, deductions, and net pay by employee for each pay period. In some cases, this record is a journal or book of original entry. Now let's look at some of the actual entries and the recognition for payroll expenses and liabilities. Here we have Academy Company who would make a record for their payroll for the week ending January 14th. They have salaries and wages expenses of $17,210. This is the total of hours worked times rate per hour. They have FICA taxes payable. This is the amount of FICA taxes that were withheld from the employee's paychecks. We have the federal income taxes payable. This is the amount of federal income taxes that was withheld from those employees' paychecks. We have state income taxes payable. That is the amount of state income taxes that were withheld from the employees' paychecks. Next, we have a voluntary deduction of United Fund contributions. Again, these were amounts that were withheld from the employees' paychecks. We have union dues payable. Those are amounts that were withheld from the employees' paychecks. And then finally, we have the salaries and wages payable of $11,522.73. This is the amount that the checks written to the employees will equal. So next, we're going to ask you to prepare the entry Academy Company would make to record the payment of the payroll. We have their salaries and wages payable, and then cash. So we would have first the record of what the actual expenses are, and then how that is comprised, who checks will be remitted to. Who do we owe for these amounts? Do we owe the federal government for a certain amount? Do we owe the state for a certain amount? Eventually coming down to what the actual checks are for the employees. When we write those checks to the employees, then we offset it to cash. Typically, when you receive a paycheck, you should also receive a statement of earnings, and that is going to show not only your current earnings, so 40 hours for overtime hours, regular earnings of 480, overtime earnings of 72, the deductions leading to what the net pay is. But you should also receive a year-to-date reconciliation that also reports what you have earned thus far to date. Employer payroll taxes are a factor of payroll. There are 3 taxes that are imposed on employers by governmental agencies that result in payroll taxes. First is the employer portion of FICA taxes. The employers match the employees' FICA contributions of regular Social Security and regular Medicare. They use the same rate and maximum earnings as the employees, with the exception of the supplemental Medicare, which is paid only from the employee's side for those high wage earners. We then have federal income tax, or unemployment taxes, my apologies. The employer is required to pay a tax on the first $7,000 of gross wages paid to each employee during a calendar year. So there is a 6.2% tax rate that is associated with this, but for employers who pay state unemployment taxes on a timely basis, they can get an offset credit of up to 0.54%. Therefore, the net federal tax rate is generally 0.8. And I believe that these slides and this book is a little bit out of date, and the FUTA tax rate is actually currently only 6%. These amounts can change annually. It's important that you actually look up what the current rates are if you are in a payroll situation. And then state unemployment taxes. All states have unemployment compensation programs that require the employer to pay a tax on the first $7,000 of gross wages paid to each employee during the calendar year. This amount differs based off an experience rate from employer to employee, from one employer to another. However, regardless of whether your rate is 2% because you have almost no claims on your unemployment, or 5.4%, if as long as you are paying your state unemployment tax timely, you get a full 5.4% credit on your federal unemployment taxes. So let's look at an entry regarding the recording of payroll taxes. Academy records the payroll tax expenses associated with the January 14th payroll with the following entry. They have FICA at 8%, state unemployment at 5.4%, and federal unemployment at 0.8%. So let's look at how this would calculate. So against the amount of salaries and wages expenses, we would have total payroll tax expenses of $2,383.59. That would be the $17,210 multiplied by each of those rates, the 8%, the 5.4%, and the 0.8, to arrive at the total percent, the total amounts that would be owed to governing agencies. Of that, $1,316.57 of it is FICA. That is 7.65% multiplied by the payroll in wages, or the wages and salaries expenses of $17,210. You have the federal unemployment tax payable. So that's the 0.8% multiplied by wages and salaries expenses. Then you have your state unemployment, and that is going to be 5.4% multiplied by salaries and wages expenses. And these represent the payroll taxes that would associate this specific payroll. So of these four different types of taxes, which of these is not an employer payroll tax expense? You should have chosen federal income taxes, as that is actually an employee payroll tax expense. It is withheld from the employees, and the employer is only a middleman who will remit it to the governing agencies. Preparation of payroll tax returns is the responsibility of the payroll department. Payment of the taxes is typically made by the Treasurer's Department. Companies must report FICA and federal income taxes withheld quarterly, no later than 1 month following the close of each quarter. Companies file and remit their federal unemployment taxes annually, no later than January 31st of the subsequent year. Companies file and pay state unemployment taxes by the end of the month following each quarter. Now, these are general schedules. Depending upon how much you have in taxes, you may have a more frequent filing requirement. The employer is required to provide each employee with a wage and tax statement, a Form W-2, by January 31st following the end of the calendar year. This statement shows the gross earnings, the amount of FICA taxes that were withheld, and the income taxes that were withheld from the period. It also could have some other reporting information on it, such as how much was contributed to a 401k, whether you have health insurance through the company or not. But the three basic things that will always be there is how much in income taxes, both state and federal, were withheld, and how much in FICA taxes were withheld, and what the gross earnings for that year were. You should probably be familiar with what a W-2 wage and tax statement looks like. They can take on slightly different representations of the form, but they will have all of this same information on it. The objectives of internal accounting control concerning payroll are to safeguard the company's asset from unauthorized payments of payrolls, and to ensure the accuracy and reliability of the accounting records pertaining to payroll. The payroll activities consist of 4 functions. First is the hiring of employees. Second is timekeeping. Third is the preparing of the payroll. And then fourth is the actual paying of the payroll. These 4 functions should be assigned to different departments or individuals. That would be the segregation of duties. Because payroll does deal with taxes, both from the employee and the employer in perspective, and also deals with actual cash. It is very important that internal controls for payroll be adhered to.